Every time I look online now, Sharesies seems to be acquiring someone or doing something or pushing a product out, and it's fantastic. What are the lessons that you learned from those years that give you confidence to do that now?
In March 2020, the market crashed. These rates that we have to hold go through the roof. We're a small business, much smaller than we are now. And it sort of got down to some quite lean numbers that we're having to put away.
Did you have the money?
We had enough money, but we were panic raising. We were trying to find some money to make sure we could keep the doors open. This is all the start of COVID, right? It's uncertain. We've just been put in lockdown. Like no one thought 2 days earlier that could happen.
What would you do differently if you were setting up Sharesies right now?
One of the things I think I would have done earlier is once we started getting customer traction, would have pushed into Australia earlier, would have moved into KiwiSaver earlier, moved into saving products earlier, would have gone harder and faster.
Why didn't you? There was like this connotation, mom and pop investors would go to Sharesies, and if you were serious, you would move on to something else, right?
And there's heaps of people with millions of dollars on the platform. These kids put in $5 a week, and there's everything in between. We will show you one day. I do get notified about that.
What's your AI offering going to be?
I'll show you on my app just real quick, because this is only on mine right now.
Have you gone to market with that yet? Said that you're going to launch it, or did we just do it then?
I think we might have just done that.
Thanks for coming back. Thanks for watching or listening for the first time. As you may have heard me say before, only about 53% of our watchers or listeners of this podcast are subscribers or followers on Spotify. And so if you're watching on YouTube right now, jump down below, hit the bell, hit subscribe, help us to make this podcast bigger and better and get guests from all over the place, help us with our production, help us to grow this platform for everyone. If you're watching on Spotify, hit the follow button, join along, and let's strap in. This is going to be a really excellent episode with Leighton. I hope you enjoy the chat as much as I did.
Kia ora. Thanks for tuning in to the We Fucking Love Startups podcast, brought to you by Talent Army.
So interesting, man, you're on the podcast because you kind of started your business on a podcast, right? Like you guys were podcasting and chatting in the media before you even had a product, right?
We were definitely chatting in the media, but it's funny, like you don't think about podcasts like now, they're so prevalent, right? But that was new stuff only 7 years ago.
Yeah.
So we did a lot of content though. We wrote heaps of blogs, like blogging was the thing. And we did do podcast was just starting. There's this guy JP I'm not sure if he still does one in Wellington, but he was active at the time. So that was one of the first ones we did. But it wasn't really until COVID that we got into heaps of podcasting ourselves, like for the business. But blogs definitely.
Yeah, interesting. I was watching a YouTube podcast last night from Y Combinator guys, and they were talking about the power of the waitlist.
Right.
You know, and I've heard your story before about you sitting there when Martin and Co,
they're building it.
Yeah, and then you were like, hey, we've got these, thousands of people that have been signing up, ready to go, and then all of a sudden, bang, and then I heard that you were watching, like refreshing the page as this
wearing that refresh page. That button, I was still a bit guilty of that when new things come out. We're just about to launch an insurance product actually, which is into the protect space. So it's like we're really building out this wealth app experience as one side of our business, and we've just got a wait list again for that. It's a bit more subtle these days. Like, the first one was literally our web page. That's all you could do. But it still amazes me how many people chuck their names in there. It's not something I would ever do. Like, I don't think I've ever signed up to a wait list for anything. But they've got...
Not a Tesla or anything like that?
You actually got me. I even paid $1,000.
There you go.
And they kept that and probably made, to be fair.
Elon is the perfect example of how to build a successful business through a wait list.
Yeah.
Everything.
I think that might be the only one I've ever signed up to.
He didn't buy a flamethrower through Tesla?
No. I did end up buying a Tesla, but it wasn't off the wait list because it turned out it was quite a long time after that I could afford one. But
I also paid the deposit for an S, and it never came. And then they 2 years later said, "Oh, we're going to not do them in New Zealand anymore." And so never got my Tesla. Hey man, so one of the things that I really like when I'm researching you, when I'm talking to you, when I'm listening to you in business, one of the core traits that I associate with you is the word risk. Like you seem to be a guy that from a really early age has always veered on embracing a little bit of risk and taking chances and trying things. Is that fair to say?
It is. And now I can't remember. Maybe I wrote that in my notes too earlier as well, did I?
It's just like on every podcast I've heard, on every story, like you always talk about taking calculated risks. You even talked about it with the way people should consume, like buy shares, right? Like it's a risk for a good thing.
Yeah, no, I was talking to someone else about this yesterday. But you're right, actually. Risk is like, for me, the fundamental like tool for success or decision making in absolutely anything. I think it's necessary. I think most people would say they were conservative without understanding what that means. And those who think they're are not conservative also. I just don't think there's a great understanding of risk and how that plays into money and how important it is. And I always feel frustrated. Well, I often feel frustrated if there's something around, people shouldn't do this because of these reasons or something. In my view of the world, normally they've overestimated the amount of risk that might be taken by whatever that action is, or underestimated or not seen the mitigants they can put in place. So I think probably people at Sharesies get I would say that's what I'm known for, always coming back to what are the risks here, how do we mitigate them, and then how do we push forward and achieve an outcome. But
So what are you taking risks on now then?
Everything. Like our life, mine and Brooke's life in particular, is risky at different times. But it's funny because it's always this. If you can get good at managing risk, you touched on Elon before. Like that's a big thing for him. Right? I've just read his book actually, and it came through more than what I would have expected. Taking risks, maybe it shouldn't be that surprising given some of the companies he started and the amount of capital he's put on the line. But
he did some crazy stuff in that book there, like living under the desks.
Yeah, he's a few things on. But still heaps you can learn from there because like taking a little bit more risk, some people hear that and think, all right, we're going all into, I'm going to be punting ponies tomorrow or something, or I'm going to everything in Bitcoin. That's not what it is. Like for me, moving or getting good at risk is just moving a little bit notch up or a little bit uncomfortable from where you are now. So that can be anything from like if you're currently got all your money in a savings account, firstly there is some risk there. That's why you're getting a little bit more than what the government would pay you, which is the lowest risk. And then but secondly, the next step after that might just be into a managed fund of bonds or something. It's just you just have to take that little step. But so I think we're always just pushing that boundary a little bit. I don't think there's anything more risky we've done than start Sharesies at the time we did. Although again, it felt like very calculated and mitigated. Like
you're all in good jobs, right?
Yeah, we were in good jobs, which can sometimes make it harder actually when you can see that clear trajectory. But we had sort of prepared for that. Brooke and I, we'd saved a little bit, I think, but we were also getting married, which wasn't cheap, as people know. And then when it happened, it just happened, and we just sort of went in a little bit calculated and thought, well, we've got to make it work now.
You say saved, but you guys you started Sharesies with $20,000, right? Which in
yeah. So that was the business account number. That's right. We had a little bit behind us because we didn't get paid for quite a while, so we had to, and it wasn't a lot of money, and particularly after paying for a wedding, and then we were, we found out about Al, our firstborn, like literally a month into starting Sharesies. So at that point, everything felt pretty risky, I think. So maybe from now, most things we're doing doesn't feel that risky. But the question was, where are we taking risk? And like, I think right now, introducing new products and really dragging like the Sharesies culture along from Sharesies right now is a very sustainable business, right? It could run for ever, and money's a long game thing as well. So it could just be comfortable and continue getting, still getting a little bit better, but we're still trying to break down norms and break down behaviors and build out that picture wider, support more companies on our path. So, and every little thing that we do every day has some pretty decent odds of failing. And if it doesn't, then my question would be, why are we trying to do that? Like, it's probably not a big enough goal.
Yeah.
And we do that by just diversifying, I suppose, across 5 or 6 initiatives at a time. And they're all risky enough that the odds are they will not go as well as what we think, but equally risky enough that if they do go well, they will go very well. So
do you have so Dan and I, my co-founder, chalk and cheese, right? Like I'm fuck it, let's just do it. I'm just jumping straight into the deep end. Dan's like building a whole plan, like risk mitigation, doing everything, and so we balance each other out. Do you have that in your co-founding team, or are you all quite risky?
No, we definitely have balance. I think we've definitely all got appetite for risk. I think we're also pretty good at one of the benefits of having such a large co-founding team is like there's a lot of diversity of thought in that, and so you can mitigate risk a lot easier, and you always have these second or third conscience coming in on what you're doing. So it gets tested quite a lot along the way. Normally, as long as you can respond to something in a way that appropriately mitigates it, we can all get behind it. So I think there's definitely different appetites across the board, but ultimately I think I would say the six of us were good risk managers. I think that was maybe one of the skill sets that brought us together, that we could equally understand the opportunity and where we had to be a little bit conservative. Like, classic example for Sharesies was when we first started, that people are always pushing to get the MVP out as quick as possible. And we were like, man, and this was coming at us almost frustratingly in hindsight, because like, you're literally asking us to break rules here. And we didn't want the first front page of Sharesies to be in trouble. We've been unlucky enough since then to land on the front pages in those ways a couple of times.
You say people were pushing you, like advisors.
Yeah, like
and
the advisors,
industry.
it's one of those rules of the startup network. And
well, you got a lot of compliance though in a product that
so much. Like, we're looking after people's money, and like, one thing I consider risk often with regards to the front page test is like, would I comfortably stand behind this on the front page?
Yeah.
And losing people's money or something like that is not one of the things I'll ever stand behind. So you just got to the patience or the ability to push back on that stuff from a risk lens, and having the confidence to do that. It's really important. Yeah.
You're talking about the money there, like people's money. How much money is in custody now on the platform?
In custody is over 3 billion.
Wow.
So and then trading volume wise, because money comes in now the platform often, and onto CS, like, not everything's held in custody by us, but trade between 5 and 6 billion a year now. So pretty big numbers. We actually just had our strategy day recently, and in our first year we had $8 million on the platform, which at the time felt like a massive number and a huge achievement. It's almost comical to think.
Was it when you hit the billion, was it less as exciting, or was it?
I think billion was an exciting number. I still get excited. You talk about me on the refresh thing.
Yeah.
I do that as well. I update people when we hit milestones however little it is.
I was going to ask you, what are you refreshing now, right? Surely you've got,
Every day I load my dashboards. I've also got my own little, Snowflake, the database software, and I have access to that, so I can query it as I please, because people got annoyed with me asking all the time. So rock in there, get these stats, but it's like one of those. It's also how you support the team, because when something launches, there's been examples where people are like, it's a flop or something because it's only done $1,000 this month, or that might be revenue or something, and it's like, no way. Like, you just, if it's $1,000, you just got to try to get $1,000.01 tomorrow, and if you can do that, $1,001 the next day, and $1,002 after that, just keep tackling it like that. Compounding is so powerful, like everywhere.
Do you find that confidence now just comes from the successes that you've had, that you can confidently say that now we can just grind it out and compound and grow these new features? I
think it's something that's pretty, I don't know how learned that is for me. I really believe in a long game of something, and and maybe I've seen enough success in that to believe in it. But there's a saying, everything above zero compounds, and so as long as you're doing something, then you can just keep moving from there. There's always you always got to start somewhere.
You think that long game came from you, like investing early? Like you said, you set up I've heard your story, and I've heard you tell this. I've heard you tell the story a million times. But you set up an investment club when you were 17. I
definitely understood the power of compounding, like, mathematically, very early, and related that to money very early as well. Well before I was 17. So I completely observed that small amounts of money over a long period of time would make a very large amount of money. And was happy with that. Also, I had no money, or not really a lot of family money or anything like that either. So I'm definitely on the side of spender, not saver. So like, a discipline is very important for me. Just a habit of like, this is $50 a week. That is now not my money. It's just and one day I will see it. So I don't know where I exactly picked that up, but the concept of that power of the compounding effect or something, I think wasn't a complex thing for me to capture. And I know it definitely is for some people think much more linearly, right?
Awesome. And so, look, Sharesies started as a place for democratizing people buying shares, right, and getting into investing, which was fantastic. I think from what I understood of you guys from the start, your mission was broader, was to try and help create more wealth, in New Zealand. The
purpose of the business is to create financial empowerment for everyone. That's been true since day one. We've changed the vision quite a few times to suit what we need focus on and where we need priority at the time. So the initial one was so the initial vision was someone with $50 and someone with $50,000 have the same money opportunities.
Yeah.
And then as we got into it, we realized $50 was too high because people felt like they were taking too much risk with $50. So we put that down to $5. And then we realized 50,000 was too low because people with $50,000, people with 500,000 still were feeling left out. Yeah. So we pushed that up to 500,000 and then eventually to 5 million. And then the money part, we just moved back to investment because that was the niche we were in and it was too easy to think quite a lot broader too soon. But then a little bit later we moved that into thinking about money wider as the team grows and as you start to solve more problems or get momentum in the right direction. For us, it's always about something can relate to it. And we're just refreshing that again at the moment, which is a vision more about like growing wealth together. So we really want to think about partnerships and how we can work with other companies and
that's what I was leading to, right? Like it feels like to me now that it's definitely more of a wealth management platform, like including other people. I've seen the stuff you're doing with Fonterra, and like my mind instantly goes, well, are they trying to cut out the stock exchange? What are they trying to do? Right? So like, talk to me about what you're trying to do with Sharesies now.
We've got 3 strategic pillars. First one is the retail wealth platform. So you can, we will support you to get wealthier. Like we actually grow wealth, which previously what we've done is we've enabled some people to get wealthier. We've given some people access to investing, but that has not necessarily resulted in a habit or something that grows wealth together. Like we talk about strategy as access, confidence, motivation. If you can do those 3 things, then people will grow wealth. I think we nailed the access part. Like
but wealth grows over time, right? It's not it's instant gratification, right?
It does, but it's not just that one point. Like the access part is like if you want me to sell that sign as an investment there, for example, the Talanani sign, which I imagine is getting more valuable by the day as well, then we can democratize that, right? I can sell that off at $0.01 a piece and people can invest in it. But that confidence and motivation bit, for people to create that habit and really feel like they belong in there and motivated to keep doing it. Like that's the wealth bit, to your point on growing over time. It's not just the democratization.
It's confidence.
It's the other part. So, and arguably, well, not even arguably, we've done the easy bit. And that was very strategically challenging when we started. Like it was, well, everyone said it was impossible actually. But now that's there. So now it's really working on those next bits, and part of that, to touch on companies like Spark, Fonterra, that we're working with, part of that is how a lot of people trust their employer. I mean, it pays them. And if you're doing something a little bit like KiwiSaver that you get that is part of your remuneration and you're working hard towards it, then we think it's great that you can earn a share in that company as well, right? You really start to understand the upside of it and where the downsides when it goes like that as well. And that's what we just want more places where this conversation is happening around money, and we'll be a great facilitator of that, but we can't achieve that purpose by ourselves. And we'll narrow in on the bits that we can best focus on, and then also support others who there's lots of people with similar purpose statements to us. I mean, I don't think there's anyone you speak to that doesn't think that would be a great outcome.
I'm an Aussie, right? I feel like I grew up in a different world in Australia versus New Zealand. Like we had the 87 crash year, I think really affected New Zealand.
Dominated,
and so and everyone's so obsessed about houses over here, like obsessed about getting their spot of New Zealand and land, and throwing themselves into a huge mortgage and then having zero disposable income, afterwards. How do you change the population's thinking?
Like a long game, right? It's like another investment. It won't just be like the 87 tarnish, I think, is worn off, and we're in the middle right now of the first recession that I have experienced as a working person. I was in the army, not Talent Army, the different army, in 2008, and I was completely oblivious to the GFC, had no idea. So anyway, we're in that now, and people have really stuck to their guns on Sharesies. Like we've got 650,000 people, and by and large, they've just continued to invest through, or they've stopped because they can't afford it or something, but they haven't withdrawn.
I heard you say that when the stock market started dropping, people were buying at the lows.
Yeah, so that was March 2020, definitely. We had huge amounts of money coming. Retail investors led that market back, which ended up being a very quick recovery, sharp drop, something like 40% over a week. And then within 2 months it was back to highs. So the people who got in there did very, very well, very, very quickly. And the institutions were actually quite slow to that in the end. But since then, late 21 to early 22, as interest rates started to increase, inflation started to get traction. Since then, it's been a steady decline of the market, a few hits and a bit of wobbles over, but it's been much harder. And of course, we've had the US resurgence lately, which is largely driven out of the AI stocks and stuff like that. But by and large, things are still quite subdued, but people are investing into it still, and that will serve them very well over time, which is completely different to 87. People bailed. I mean, people were mortgaged against it. They were taken down off their home loans. Yeah.
But I say 87, right? Because they're like our parents, well, not my parents.
What's the Australian, like, what would you say are the Australian memory, or is there a collective memory of 87 for the Australians?
I think it was like a blip on the radar for us.
Yeah.
Because
the recession-proof country, right?
Yeah. Like we felt like we were in an island in the middle of nowhere and nothing could touch us that much. And
with
so like
lots of stuff on the ground.
Yeah. And I mean, oil, like iron ore rich, right? And so I think mining definitely has helped that country. But also I think fundamental belief as an Australian is from a really early age, you're brought up to say, go after it, just go get it. Like everything.
Comes back to that risk word, right?
Yeah, take risks.
Australians love risk. Yeah.
We love to get outside of our culture zone, like our comfort zone, and I think that's all our idols. That's all they ever preached. And so for us, I think, for me growing up, you don't think about the past now. You're just like, it's the opportunity in front of you. Don't look backwards when you can look forwards. But here, like a lot of people I spoke to here, like a lot of Kiwi dads speaking to their kids, or I mean, if I'm at like my kids' school things and chatting, I don't know about the stock market, or I don't know this, and I'm like, fuck, like.
And missing the point, that sentiment is so key to it, right? It's why the US market comes back so fast as well. Yeah. It's like, if enough of you believe that it's going to come back, it will. Like,
it's just confidence game.
That's a fact. Yeah.
And I think long game, right? Like we're not looking with a 10-year lens enough at anything in like business and finance and everything. If you're looking at something in, oh shit, my meme stocks, fell over and now they're fucked, or now the Tesla, rocket is falling off. Sure, it's going to go down, but like go under the Sharesies app and zoom out over 3 years or whatever it is, and then look at it, right? Yeah. Like zoom out over 5 years and then look at it. One thing I'm interested to talk to you about is like, what would you love to be the typical Sharesies customer in terms of an investment strategy?
I think it would just be, the customer would just be confident in what they're doing. I don't think.
So if anyone's listening to this that's not investing, right, and they're like, Sharesies
is built for dollar cost averaging.
Yeah.
So then that is choosing an amount that you can afford, that is not stressful. So for me, like my investment club's a great example. That's how Sonia and I got talking. She wanted to do something. She was like, where's a place we can invest with $50? And we were introduced because like Leighton's got a place you can invest with $50. That's sort of how that conversation happened. And the $50 was an amount that was not stressful to me at the time, even though, I was a student, I had no money, but I could, whether I had $50 or not was not a quality of life decision or anything, right? So sometimes I think people overcommit. They're like, I'm going to do $1,000 this month. It's like, that's very stressful, so you can just start with any amount just to get going. So that's what the platform was built for, and I'm putting in an amount you're comfortable with regularly into diversified investments. And really it's built with like a hub and satellite type approach, where most people on the platform have some funds in the middle, which is probably most of their investments, and then they pick some stuff around the sides.
They have a crack at a company every day.
Have a go at a company every day. That's exactly, and people will say it like that as well. And I completely encourage that. It's how I invest. And so that's how we would encourage people to use the platform if they're not feeling confident about it. And then again, just trust that it doesn't matter if your money is worth less than what you started with the day after or the day after that. It doesn't even matter if a year later your money's worth less than that. Just back the process after that, because you're just arguing against a political system. Otherwise, like the stock market has no choice under our current political settings but to go up.
It's only a loss if you take it out, right?
Yeah.
Hey man, so running a business like Sharesies now, what is the average money that people have in Sharesies?
About $5,000 or so thousand.
Yeah, awesome. What are the challenges now? Like Brooke was really good when she came on the podcast about, hey, shit was hard and this and with that, and I think she told a really good story about when you went on the news, something happened on the news, and then the website crashed or something.
In our lounge and panicking on that. Yeah.
What are the challenges that you learn along the way that give you confidence to be able to do what you guys? Because like every time I look online now, your Sharesies seems to be acquiring someone or doing something or pushing a product out, and it's fantastic. Like I want to see more New Zealand companies have success because it's just going to help and teach everyone else, right? And so, what are the lessons that you learned from those years that give you confidence to do that now?
It was probably around March. It was March 2020. So we as a business, we've got all these capital requirements that we have. So we always have to, every dollar that goes to the platform, we have to put some of our own money up. So it can be quite an expensive business to be tens of millions of dollars sitting on our own book at any given time that are just, our license to do business basically, right? And in March 2020, the market crashed, and what happens is these rates that we have to hold go through the roof because it's got lots riskier. So instead of holding 5 cents for every dollar that someone puts through, all of a sudden we have to hold as high as 35 cents, so that really blows out very, very quickly. We're a small business, much more than we are now back then as well. And it sort of got down to some quite lean numbers that we're having to put away for these capital requirements at any given time. Anyway, we got on the call with one of our shareholders who doesn't like to be mentioned too often, keeps under the radar, but very successful, and has seen a few of these downturns. I think he's sort of late 70s now. Anyway, on the phone, we were just talking through, and he was just like, we'd sort of gone through how stressful it was, because it was stressful.
Did you have the money?
We had enough money, but we were panic raising. We were trying to find some money to make sure we could keep the doors open for everything. And this is all the start of COVID, right? It's uncertain. We've just been put in lockdown. Like no one thought 2 days earlier that could happen. We're trying to sort out our staff. We've just had a baby as well, actually, about 3 days before that. It was just like this real manic time. And then it was just like this real calming thing. He came over and he's just like, look, Leighton, nothing's ever as bad as what it seems, and nothing is ever as good as what it seems. It's always just somewhere in the middle. So we'll be right. And and then it just sort of calmed everything down. And he was like, how much money do we need? And we sort of sorted that out. And then we went off, and I repeated that about 10 times over the next bit. Every time I had a panicked conversation, I'm sure you remember how mental that time was. Yeah. It was just so mad. Funny to think. But anyway, now I always think about that when things are feeling tough. I'm just like, oh, it's never as bad.
And I imagine that COVID would have helped you guys, right?
It did in the end, but it wasn't clear. It was not clear in that first 2 weeks that was going to be the place.
But that's when the magic, I think, always happens, is that you get tested before something. Whenever something really great's ever happened to me in my life, I've been tested before that moment. It's almost like some weird thing. I'm not religious or spiritual, but it's like I feel like, oh, I'm in a test right now. Something good's going to happen. And so I've trained my brain now to think, to get through a hard point, there's going to be something fucking awesome that's going to come off the back of it. Completely.
And I think it's just as important to remember on the other side, because potentially, and maybe Brooke touched on that, but we end up having to restructure and reduce the size of our team probably about 18 months ago now, which was not something we ever wanted to do. Maybe that's partially to the other side of that was everything is also not as good as what it seems, right? You're always just in the middle. Sometimes you need something that just brings you back into some state of normal, and that it's just somewhere in the middle. Anyway, that's a quote that I think about often now. If it ever feels like either it's going too well, I'm like, right, okay, where's if it's not this good, what is the thing that's coming at us? And we can think about where those things are. And if it's feeling like it's really hard, it's like, right, well, okay, actually, there's going to be a good opportunity here somewhere, because I know we're in the middle. It's somewhere in the middle.
You love a quote. I'll give my favorite quote. I watched this series on YouTube called the Actors Roundtables, and they just get these famous actors around. I love anyone doing anything creative. I'm fascinated by it. I love to understand how their brain works. So these Actors Roundtables like this now, they'll have 10 famous actors around the table. And I think Shia LaBeouf was on, and Tom Hanks, and I can't remember who the other's on, but Shia asked a question, and Tom Hanks said, you think this is tough right now? This too shall pass. Right. You think you're the shit right now? This too shall pass.
Right.
You think everything's this too shall pass. And he goes, I wish I had known this too shall pass.
Right.
And that was something that just moved me, because I just, exactly
very
like your quote, right?
Right?
That's exactly just it's in the middle right now, just keep moving forward.
Yeah.
Right?
Yeah.
And so do you think that's shaped you now, that quote, that moment?
Yeah. I mean, it shapes my thinking and how I encourage others to think, because so much of our role now is how we can bring other people on that journey. I sometimes think, all right, it's all good to do that, and often that works. It does for breaking through a big wall or something like that. But probably most of the time, it's it's not that fun ending up anywhere without the carriages on, you know. So how you make sure the carriage is on that train and telling those stories. So that's often where I'm thinking about that stuff. It's right. I appreciate how this feels like the best thing ever or the worst thing, but I'm just going to normalize this slightly, whichever way that has to go. And let's think about that, because it also means like when you're absolutely humming on something, like momentum breeds momentum. I'd heard about you years before we used you, right? And it's just this, again, it's that compounding effect of things in that long game. But this momentum means that when things feel like their very best might just be the time where you're just getting started. You don't know that yet, right? Because that curve is going to go. So if you can encourage someone just to normalize back, I'm nowhere near the peak here, right? In fact, hell, bring yourself a bit lower and say, this is not even middle ground for me. This is where I want to go, because that's normally where my head's at. Like, doesn't matter how good things are going. We set these massive OKRs, and people used to get really upset by them in the team, and mostly that's a communication issue. But like, I can 100% be disappointed by missing an OKR or a stretchy goal that we've set, at the same time as I'm very chuffed by what we've achieved. Like, there's no problem in my brain about having those two feelings at the same time.
Are you still a startup now? Like, is Sharesies still a startup?
Look, it's.
Do you consider yourself like? Who cares what it's like?
I think we would. I think we would consider ourselves a startup, but there's places that we are not.
Yeah. So I think the reason why I wanted to ask you that, right, is so we did a bit of recruitment for you guys.
Yeah.
Super impressed with some of the like senior leaders that you've got in your business now, and I think that as a guy who also has startups myself and other things, that I literally get to learn as a CEO of some of these tech startups by some amazing people around me, and I feel like I'm always leveling up, right? And so I feel like you guys are at another level now. How has the culture changed from what it was to now?
I think the culture's probably pretty similar. We've just learnt. It's just I think as leaders, for Brooke, Sonia and I, we do a way better job now, but still lots, like we still learn from people all the time as well. Very lucky to have brought an experienced leadership team in. Like, anyone who thinks that we are running the day-to-day of Sharesies is like a million miles off, right? That's not, like, right now I'm working on payments, and Brooke's just been finishing on this like acquisition thing for the orchestra that we've been doing, and Sonia's been leading the insurance work, and so like we're sort of like right in there still doing what we're good at, which is that bringing it off the ground and getting it, the 0 to 1 space, and being able to imagine it. And then as well, for the rest of the team, we still have the benefit of setting the targets and challenging why things are not being met fast enough, right? It's such a privilege, particularly when you're not having to do that all as well. But I think the big thing would be we've got a culture now that's really embraced that. And maybe one thing we didn't realize is like Sharesies was such a young team to start with. That's for a few reasons. One is the brand appealed to them. We were young. I guess you hire people that sort of, that's what we could afford in the experience thing. And there's been lots of people developed through Sharesies into senior leadership roles completely, but also hiring in people with more experience. Like, I think all of us have been lucky enough to hire our old bosses, for example, the ones that we've really driven a lot of our development and stuff. And like sometimes that experience is just, you just can't, you literally, the only way to do it is buy it. It doesn't just appear, right? And it's fascinating. Some of the things that we find very hard are just par for the course for our team. It's like, again, they've been there, they've seen it, they've had that worst case.
They've got the playbook, right?
Yeah, completely. And so that helps heaps. But culture-wise, I think we're still... I think it's a good place to work. I think we're still very flat structure-wise, although we're also aware that hierarchy comes in an organisation when you've got a couple of hundred people just through.
Well, I think you have to mature or make decisions based on your culture as your business grows, and you can keep your fundamental core beliefs and DNA, right? But you have to scale yourself. Have an org structure and hierarchy that's suited to the next stage of business. Yeah, and I think one of the stages of business when you start to care about a bottom line, right? And I guess so we've had no choice again, like many companies over the last couple of years after being capital funded, or external investor funded for the first 5 years of our business into the last 2 years. It's like really bringing that into worrying about the cost line a lot more and actually how that revenue's coming. That's been quite a big swing, but I think the business did it. We think we did it very quickly. So I think we can still move very, very, very fast.
and I think we've got good at enjoying the wins at Sharesies now. Like maybe not always so hard on ourselves. Yeah.
Yeah, good man, good. Hey, you mentioned that acquisition just before that Brooke was involved, and were you across that as well?
Yeah. So yeah.
Is that the first time you guys have acquired someone?
It is. Yeah.
How was that?
It's not something that was overly on our strategy or anything. We've always taken a build approach, but this one here, it just felt right in so many ways. We actually had like a welcome dinner, and Brooke was speaking at it last night to a bunch of their customers, and one of the examples she gave was when we first had saw our own shares, we were like looking at each other thinking, oh, I wish this was on Sharesies, this is a thing. And of course we do that for a bunch of very large public companies, and started to think about how this could work, and the conversation sort of happened quite organically once we met the team. It's like, all right, we're kind of aligned here on where we want to go. You've got some growth happening in Australia, we're in Australia too. The timing might be right to bring this together because we want to just fully grow out this part of the world. It was just like a really smooth process, and hopefully we'll make it a big success now. But I feel like already it will be. Like the people are just so good and fit our culture so well.
Yeah, good guys. I like them.
Yeah.
And for me, that's something that I personally would love to see more of, like making it easy for people to be able to see. Like ESOP is a real dark arts for a lot of people. They just don't understand it. They don't know how much money they have, what they're worth, like how much is vested and the likes. Even when so I went through when Venn got acquired, that I obviously had shares, and I was like, oh, how much do I have? How's it work? And so like being able to showcase and like support and raise more awareness around this is
make
really
it tangible,
important.
right?
100%.
Yeah.
Like, so we're in the process of launching like a real-time salary data platform,
right?
And we want to like make we've got now, so get to a point now where you can jump on the platform and type in, you need a senior developer for Talanami, whatever it is, and it'll say where they are, where they listed, are they working from home, and it'll show you the figure. And so we want it to be like the homes.co.nz like valuation, right? So that everyone's got a number that they can work with, right? And then you can be like plus or minus at that, right? And I want the same thing for the shares as well. Like I want people to be able to see, if I go and work at Sharesies, this is the percentage of shares I get, and this is how much value they are. And I think that's how we entice a lot more people into the industry, is by showing and making it a little bit more open.
Yeah, and there's, the openness would be so great, right? The people who really understand this, people who worked at Xero, Venn, Trade Me, Timely now, like the ones, and I mean, there have been a few early Sharesy staff now as well have also turned that into cash, but we're not at the point yet where that's really widely.
Yeah.
But that's the achievement. Like, you don't want people owning shares for shares' sake. What you want is them to have something that's going to grow and
have wealth that they can throw back into the economy,
exactly,
right? And create another company. And I think this is where, like I've heard you talk on this before, right? The way we benefit New Zealand is lots more people starting companies and investing and doing all these things. And like, power to you, I'm a believer in it as well. I'm so excited by markets like this because I know that unfortunately a lot of people who hated their jobs in government, and I can tell you that hated their jobs from interviewing them, now have been made redundant, and a lot of them are going to often start businesses because they're just like, well, fuck it, there's nothing else I can do right now. There's not a lot of work out there, and it's going to create massive opportunities in the startup ecosystem, supporting the public sector, whatever it may be. And so I'm quite excited to see what's going to happen in the next couple of years.
Yeah, I agree. These times,
Yeah, so you can already see it.
Making diamonds.
I was talking to the Ice House guys the other day, and they was like, they were investing more. They've invested more this year than they did the whole of last year or something.
Yeah, that's right. I saw that same stat. Yeah.
What would you do differently if you were setting up Sharesies right now?
To your point earlier, on always looking forward. Don't do. I always find these questions really tough, actually. Because got where we got, I suppose, because of how we got here, and so far it's gone okay.
That's a fair point. Well, if Jono, our producer here, was building a videography app, what would you tell him? This is what you really should do.
Yeah, I think I'd really go with whatever feels right, and I wouldn't focus too much on rules.
Yeah.
And listening to those rules. And one of the things I think I would have done earlier is once we started getting customer traction, I would have pushed into, and we had this wider purpose and vision, I would have pushed into some of those things earlier. Would have pushed into Australia earlier. Would have moved into KiwiSaver earlier. Would have moved into saving products earlier. All these things would have gone harder and faster on that sort of stuff. And
why didn't you?
Because there was a belief that all of that stuff would be much easier if we had more customers. Things do not get easier with more customers.
Yeah. Can you do like you guys at Sharesies have got ambitious goals, for Kiwis, right? Which is great. Can you do that by just being a New Zealand company?
I mean, there's lots of great examples, I think, and if anything, localization is becoming more and more of a thing, particularly in heavily regulated worlds. So I think you can. It's not what we want to do because we're technology experts. Like we believe that technology and design is where we win. But I do believe you can. I think there's still lots of very strong New Zealand businesses, and there's probably quite a few things that we use external resources for that we could do in-house in New Zealand. Yeah.
Who are your mentors or idols, mate? Like, do you have people that you talk to about next stages? And
I find the most valuable conversations the people right in the same quite a similar space to where we are.
So collaborative learning, right?
Yeah. Like I wonder how helpful I would be to someone who's just starting right now, for example. I think maybe someone who's year 4 or 5, can probably be quite helpful too, but things change so fast. And then all of a sudden you find yourself delivering rules to people, which is exactly like my number one piece of advice. Don't listen to rules, like what feels right.
So you can just listen to people in your same circle, go fast.
I absolutely have a network of people that catch up with regularly, and we just talk and we cover things. And obviously I'm lucky to have 2 co-CEOs, so we talk a lot. Our board, a lot of our early shareholders, we spend a lot of time with them, actually, including those who, some of our shareholders have very similar businesses offshore, and that can be really valuable conversation. And then a lot of listening to podcasts. I do much more listening than I do reading.
You guys are doing a lot around education, and like financial education. Is that something that you're doing more for the love than for profit?
Well, Sharesies is we're a B Corp, so we're trying to do for both of these things, right? We believe in profit and purpose and them working together. In fact, we believe that the two of them work best if they happen together. And we're very lucky that our commercial model, or the business model of Sharesies, is people investing in growing wealth. And if the number one thing holding most people back from investing and growing wealth is education. So it's both very good for people in the industry. I think that we do invest so heavily in education because it is a massive investment from us. The other option for us is probably to go where all the other wealth managers are, which is over 60, retired, or where those are, that's not what we want to do. But equally, it aligns really well to our commercial model. And we try and make sure those two things always align, what is good and what makes us money.
When you guys first started, I mean, I can't remember exactly when. I'm not sure if it was your competitors or whoever it was, but there was like this connotation, the mom and pop investors would go to Sharesies, and if you were serious, you would move on to something else, right? Do you think you've shackled that? I
still hear that from some places. And what people miss is normally when I hear that, it's probably from people who are less confident than what they...
And do you kind of love it? Because you're like, fuck you, I'm going to show you.
Sometimes I do. Even internally, people have that feel sometimes. And then I think, just look at the last few weeks of media that Sharesies has had. We put out our index, which was on every major news channel, showing sentiment of investors, representing retail investors in New Zealand. It is the largest pool of retail investors in New Zealand and Australia, probably. The second one is we bought Orchestra, so we're out there buying this company that has got, for private companies, and it's got all sorts of people that are working in there. And then on top of that, we announced a partnership with Fonterra, which is New Zealand's largest company, who has chosen us to build a product to enable their shareholders and the farmers that own Fonterra the ability to manage their shares, right? So sometimes I just remind people internally, have a look how this looks externally. It's you're stressing about something that's not there. I'm personally very confident with money and the concepts of investment. I studied finance, I worked in banking. Like I say, I've always had a natural appreciation of compounding and the maths around that and stuff. And I still think if I was choosing a platform, I would use Sharesies. And I have lots of shareholders and friends who I would say, I'm quite aligned to, and we talk about business in the same way and finance in the same way, and they use Sharesies too. And there's heaps of people with millions of dollars on the platform. And there's lots of people with $100, and there's kids putting $5 a week, and there's everything in between. And then, there's the odd bucket who, for whatever reason, think that it's not for them, and that's all good. And I do feel like we will show you one day. I do get motivated by that.
Yeah, I kind of love that. And I think it's... that's the thing I love about startups, right? Is that just don't listen to the noise and you just go after it. And next minute, you know,
Yeah.
you're on the news.
Yeah, and I think I said that quote right at the start. Like it's probably exactly that. There are more until you count them.
Yeah. Yeah, there are more until you count them.
Like it's like if you read Reddit, you know, there is always 5 very negative people, but by and large.
I saw you did an AMA on Reddit, man. I was like, "Ooh, brave."
I had a lot of comments in that about, but again, like actually got quite a lot of support out of that. So
yeah. Awesome, man. Awesome. Hey, so AI, right?
Yeah.
AI investment bots, AI.
we're about to launch one actually.
Yeah, I was just about to ask you. Like, you guys are launching everything at the moment. What's your AI offering going to be?
I'll show you on my app just real quick because this is only on mine right now. Well, not only mine, only the teams, but. We've got a few things happening in AI, but specifically in the product, we're doing customer responses. So now over 60% of our customer queries are now being responded to via AI. So that's happening all through the night and to a really high standard.
Yeah.
But the next one is this, which is it's called AI Scout. That's within the app. It's sort of like your meta type experience or something where you type in themes and it'll come up with.
So I could get in there and say, hey, I'm thinking about investing in this meme stock.
Exactly.
Should I?
Yeah. And so it's not going to give you an advice thing back yet, but that, you know, you can see that's going to be the future. But it is the first step where you can Google.
Well, cause this for me is where I think AI in wealth or financial platforms is amazing, because there's so many people that are too scared to have this conversation because they don't want to look dumb, right?
Yes.
They don't want to go, oh, should I buy this company, or should I buy an EFT, or should I do this, because they don't want to look stupid.
Yeah.
And being able to give them a platform to be able to ask questions and seek advice without feeling, you know, embarrassed, huge play.
Yeah, it's awesome. And then people can put themes in on anything that they want, you know, and we've got some prompts there, so it'll be great to see that out in the wild.
When's that launch?
It's in my pocket, so there'll be testing from staff over, which means that's like the last stage of testing before we launch something, basically.
Yeah. Have you gone to market with that yet? Said that you're going to launch it, or did we just do it then?
I think we might have just done that.
Yeah, awesome.
Yeah, I'll get in trouble from someone back in the office.
Yeah. We've touched on this a little bit, right? And I want to go back to it because this is when last time I spoke to Brooke, one of the biggest comments that I got back was, why should I invest in a recession? You know, and I think there's a lot of people who don't have the money now. And I've actually heard you say this, like, a lot of people say, "Oh, don't invest what you can't afford," and don't do all this. Yeah, I can't afford anything, right? Like, so I may as well invest it. But I always my favorite quote is, "Don't waste a good recession."
Right. Yeah.
And it's a horrifically capitalist thing to say, but you have to have the ability to like invest now as the market improves.
Yeah.
What's your take on it?
I just think if you can be investing, you should be investing and trying to time the market. You're either doing that as a strategy, which is a strategy for very few people. Like, you just have to be so involved in that world.
Yeah.
So you like need extreme amounts of passion for it. It's not just like something you choose to do to make money. It's something you have to really love.
Yeah.
And even then, you're only returning incrementally above what you might, if you're lucky, or you might be losing incrementally below. The dollar cost averaging thing is this regular buy into markets is a really shit strategy if you only buy when things are expensive. Mm-hmm. In a recession, normally markets are down, as they have been over the last little bit. So you get these opportunities to buy, and you can call it, there's a term called averaging down in finance. So even if you started high, it's fine to be buying lower. In fact, it's a good thing. If you thought it was worth something then it's definitely worth something here, right? Unless you don't think that's true, in which case just stop investing in that and invest in something else, or choose a fund where someone else is deciding that for you. But it's important to keep on going through that, and it comes back to what I was saying earlier, where the number you choose to invest should be a number that is comfortable, and it should be, when people set a budget, they've got their expenses and then they've got their discretionary, and on most people's budget, and the discretionary line is their investments. We should put the investments into this line over here. This is the non-negotiables. It's with my food and my petrol to get to work and whatever else. And let's put that there. And if it fits in that bucket, it might mean you put a more realistic number. So you've still got your fun money and the stuff you can actually stop. And then when you get the chance to do that, you just make sure that habit continues on. It's one of the ones. And coming back to the investment club, the reason that worked, like, we've had now 17 when I started it, 37 this week. So that's like a long time, 20 years. I've never missed the $50, even at times where financially it was stupid that I was still putting my $50 into there. You know, when I was a student, I'd maxed out my credit card at night or something. Just a common, unfortunate feature of my life back then. But I'd still put my $50. And the reason for that was the amount of shit I'd get from my mates and family if I missed my $50. It was just like a non-negotiable, right? So for me, it was always in that, all right, no matter what happens, I will find that $50 to put there. And like I say, still do it today.
With the same people?
Or? Same people, yeah.
Yeah.
It's pretty, I mean, maybe there's one or two. No, actually, I think, no, there's one person who's gone, and that was pretty early. But everyone else is still there, and that it's actually like a really substantial amount of money now.
Do you mix up the investment opportunities? Or
we choose all sorts of like random things, you know, from like herd of cows, which because we grew up in Harwood, Taranaki, that's what you do there. Like we had property because that's at the time what everyone, that's all we knew.
Yeah.
But now we have, I mean, they have reasonable shareholding in Sharesies as the business and other startups, and of course some listed things as well. A bit of crypto, like there's actually it's just really diverse range. But the thing is, every week out of 10 of us, you've got, or there's actually 15 of us, so you've got like $750 that are going to be invested somewhere.
Would you ever do like an investment VC business? I know you do a little bit of private angel investing, but do you?
It's one of our ambitions at Sharesies to make that stuff available to people soon. Like we're actively looking at that.
Awesome.
It's very important that people. There was an article recently that said KiwiSaver should never go into private investments and stuff, and I just think
I fundamentally disagree. That's
just
as someone that made a lot of money at a Vend and other companies and shares, I have shares in a lot of companies that potentially could do really well.
Yeah. And we've got some great companies, and if we can, again, with like sadly, most of the good companies in New Zealand, the really strong companies end up getting most of their capital offshore. So there's a bit of maturity to do in our. Though that might be challenged by some of the VC community, but my belief there is on that, on the ambition, and then we get the opportunity to hopefully fund them to success, and this ecosystem will just continue to build, but we have to invest in it.
I'm thinking about this, right? Would I take money without the VC pressure?
Right.
Yes, I would. It's interesting, right? So we're talking about Kiwis here. That on one end, you've got the people that aren't investing taking no risks. On the other end, you've got your Tim Nackys on Instagram.
Good Harwood boy.
Yeah, he's doing well. I think he's at like 800,000 or something at the moment.
Yeah, I saw that. Yeah, it's mad, isn't it?
Oh, it's crazy, right?
Yeah, he grew up with that guy, childhood friend. It's like, he's a bit younger than me, but yeah, the same.
He's bloody hilarious.
Friends. Yeah,
he's bloody good. I just hope he doesn't lose it all.
Yeah. He'll have made something out of it, that's for sure.
He's a good marketing opportunity that you should see if you can get him to invest it all back into Sharesies.
Yeah, I'm not sure how close we want to align to Tim Nackie's strategies, but I'll definitely give him a high five if I see him back in the local in Harwood, though. Yeah.
So you're also heavily invested in a brewing company as well. Can you talk us through that?
It was just like another thing that just sort of happened quite organically. Really wanted to start a pub. Yeah. Classic dream, and had a mate who was great at brewing, and a mate who was great at running events and stuff, and another friend that was really interested as well. So there's four couples in the end, and we were just like, we've just always just been a doer of stuff, you know. It's always like, I don't believe it's the idea, it's just the people who do something. Yeah. So we just opened a bar and a brew pub, and now we distribute beer across New Zealand and Australia, and I don't have a lot to do in the running of that now. I sort of do weekly or fortnightly catch-ups with the team. Mark and Tom, who run that, do a very good job. Very, very different industry, right? It's so fascinating, like two completely different businesses, but still a reasonable amount of crossover where we can learn from each other on different things. But yeah, it's a tough game. Like software's from a margins perspective, a easier way to play. Yeah,
there's a lot more fat in that. Well, we just touched on this a little bit, that you are a little bit of an angel investor as well. Mm-hmm. Talk me through now. There's startups that are in this market right now, like getting off the ground, are going to start probably in the next couple of months thinking about going out to investors. Hopefully they've got some revenue now and they're going out. But what are you looking for?
I mean, we do have a few investments, and most of them are friends, or people that we've met across the way, and and always happy to chat with people on this as well, and intro them into different areas, because I think finding people who completely get your problem, they don't need to believe that the solution is plausible. Like, I don't think that's a good effect of anything. The least I can believe something of a problem, I can get behind. the more I like it. It's
The less you believe of the
the less
problem.
I believe that it's solvable in this way.
Right.
So I think that's a common thing I've heard in the investments that I've seen go well is most people do not believe it to be possible. As soon as I think that, rather than going into a negative space on it, I very quickly turn my mind into, right, maybe this is an opportunity I should look closer at, because this person might see something that we do not.
Interesting. Yeah.
I think really being stubborn to that, whatever that belief is for people, you've got to plow on through and be really water off a duck's back. That's the type of person I'm looking for, someone who has a huge amount of resilience.
Yeah, the person. So you're backing the person, you're backing the problem being impossible.
Yeah. I mean, starting with the person, like you have to believe the person can do it. Second is the market big enough, or do I believe the market's big enough for a business? And I will form a view on that almost always. So explaining that to people is very good. Like, if it was as big as it could be, what is it? Because some people, get into the granulars straight away, and I personally don't care about those. I just care that in 20 years this could be gigantic. And then the final one is, do I believe they can fund it to a level that would be appropriate?
Awesome, man. Hey, we're nearing the end of the podcast, and I have a question for you from a previous guest. And so I'm going to ask it to you, and then I'm going to get you to come up with a question for the next guest, all right? So you have a think about that while I'm asking. And the question was from Asantha at PaySource, who, as a listed company, said, how do we grow the number of publicly listed companies in New Zealand, and how do we make it fashionable or sexy again to be a listed company?
Yeah, arguably that's exactly what Sharesies is trying to do, but it needs to be a really. I mean,
why should I list as a company?
Yeah, well, I mean, for liquidity, right? Either you want new capital or you want liquidity, and most companies will get to a point where that's true. What has now become extremely prevalent is that private markets are doing a good job of the liquidity and the capital side. Sometimes the listed markets aren't keeping up with valuations, and there's a lot of rules, there's a lot of risk, those factors just a little bit out of balance. And then someone like Asantha's, he's gone early on that and really leading the way and doing a great job. So, and he's got a lot of experience behind him to make that a success. If I'd had the chance to ask a question back to him, I'd say, would you have done it again? And, I'll have that conversation with him at some point, because what we need is him to say yes, because if he's not saying yes, then we're not going to achieve what he's asked, right? So
I'm pretty 99% sure he said yes.
Right.
Yeah.
So, and that's great. So we get that story out there like you're doing in this podcast, and, we can do that on the Sharesies stuff, because and then play a longer game on it. Because if we can get more, like we touched on KiwiSaver and private business, is talking government around that at the moment, things like these funds available, and there's a genuine avenue to market for these businesses. There's definitely a shareholder base, like over 70% of Sharesies flow every day goes into the US markets. So, and we can get people to have more benefits here. Like, how you've got to incentivize that. Whatever it is, we need. I think just hoping's a shit strategy, and I don't think there's a really good, strong strategy out there. But it is something that we are thinking about actively at Sharesies. We will chat with likes for Asantha and stuff, and the bigger companies as well, because I do genuinely believe it's in New Zealand's best interest that that the outcome of listed companies is that anyone can invest in them and do well out of them, and it would be nice if there's more for that to be possible for them.
Yeah, I think so, and more exciting opportunities for Kiwis to invest in Kiwi companies, right? And I think what Asantha mentioned was that he said he's got so many customers who are also his investors, and
completely.
he's like, that's the most exciting. Like he was emotional talking about it,
right?
And so I think it's a great sign of a company if you back it as a customer and as a shareholder.
Oh, completely. Yeah, and there's a huge crossover in that.
Yeah,
huge.
100%. So what's your question then for the next guest?
For Bron specifically, I'm interested in, she hires some amazing people and develops a lot of people. Actually, we're lucky at Sharesies.
So we're talking about Bron Thompson,
Bron Thompson,
who's coming on in about 15 minutes.
Right. Yeah. She may not enjoy this particular that statement from me, given how many people from Springload that Sharesies has working with us now, but we're very grateful for that. But I'm and her attitude towards that actually. But I'm interested in how. If she could explain how she manages like real disciplinary experts, like people who are subject matter and like creatives or devs, and they're so great, and how she balances that against whatever the business or the need is, given it's an agency that is external to them. Quite often the decision maker is somewhere else. And I'm genuinely interested to hear this response, because I think it's something that could also serve companies internally as well, when you have people who are experts in their craft, but fundamentally you need to balance against other objectives.
How would you answer the question yourself? Because I know that you have got like staff engineer now and principal engineers, and you've got specialists and you've got mentors and not mentors. Like, how do you balance it?
I think we balance that through a pretty traditional way. I think we used to do a poor job of it. I think we've now moved into P&Ls. So there's like a profit and loss responsibility by the product managers, by the product leads per team. And I think that's how we manage it. Like the whole teams, like these creative and technical experts, know that one of the constraints they have is the P&L, and that's the ultimate measurement of it. And I think that's helped us a lot.
Has it made more challenge for Tony and the finance team though?
No, it's not. I mean, probably.
Yeah, awesome. Hey, brother, man, it's been awesome having you on. I really appreciate it. I think there's some really good nuggets of information in there for folks that are up and coming. And like one thing that I particularly liked is that you are talking to people at your stage. And I think that's something that like we fantasize a lot about, trying to be someone else. And I think there's some really cool Kiwi companies coming through. Like I've seen you and James and the guys that are all sort of together. And I think there's some really great companies coming together at the moment now that are starting to like level up again. And so I think that's really good. Pleasure to have you on, mate. Hope you enjoyed it. And
enjoyed the chat. Thank you,
mate. Well, that's it. Thank you so much for watching or listening to this podcast. Really love that chat with Leighton. I'm really excited by the Sharesies journey. I truly believe that they're just going to keep getting bigger and bigger and better and innovating and pushing products out. I mean, we also just had a launch of a product on the podcast right then with their new AI bot. And so really love that chat with Sharesies, and I can't wait to chat with the next Sharesies founder. I think I've got 4 to go now, and so hope you enjoyed it as much as me. And until next time, please jump down and push that subscribe button, hit the bell so you get notified, push follow on Spotify or Apple or wherever you're listening to it. And thank you so much for your time. Until next time.
This podcast is produced by John O'Tucker from Empire Films.